Hey everybody, Smart Silver Stacker here. Hope you're doing well. Inflation appears to be here to stay, and there are many signs that it is probably going to get worse before it gets any better. And in today's video, we're going to talk about some of those signs and also a question that I'm sure many of you stackers out there find yourselves asking is, if inflation is so persistent, then why is silver still so cheap? And why is the price continuing to fall? Well, I'll do my best to answer that for you in today's video. And today's video is brought to us by SD Bullion, home of the lowest price on gold and silver, period. You can check them out with the link down in the description, or you can head over to sdbullion.com/new, where you can get your first purchase of gold or silver at spot price. Now, let's get into some of the most recent inflation data. So we recently had the EU report some of their inflation data, and across the EU, the inflation rate now year over year, 8.5%. Now, we have many headlines reporting that this is a decline in inflation. And it's true, the year over year CPI in the EU did fall. It fell from 8.6% in January. But if you ask me, it's hard to imagine trying to paint this 8.5% year over year number in any kind of a positive light. And there are also some inflation hotspots in Europe where really the inflation numbers are just kind of getting out of control. In Germany, for example, the CPI there now 9.3% year over year. And there it actually ticked up from 9.2% in January. Now in Italy, the year over year CPI now 9.9%. So they are approaching double-digit inflation in Italy. And, this just shows us that inflation is not a phenomenon exclusive to the US. It is accelerating throughout the West. And, I'm not too familiar with how they calculate the CPI in the EU, but if it's anything like the CPI in the US, then it understates the reality of the inflation problem there. So, they're getting squeezed over in Europe, and so are we here in the US, as anybody who goes shopping or eats out at a restaurant is likely aware, because real prices here in the US are still continuing to far outpace the official CPI. And this is related to all the, hedonics and adjustments and things they do to keep the official CPI number low. Not that it is historically low by any means, but we recently got some additional data from the Bureau of Labor Statistics. They released data regarding the unit labor cost in the US. Now, this is a measure of wages versus productivity. So essentially, how much you are getting out of your workforce compared to how much you are paying them. And this number rose 3.2% in quarter four of 2022, according to the latest reports. Now, you can compare that to a 6.3% increase throughout the entire year of 2022. And when you do that, you realize that in the fourth quarter, the unit labor cost not only rose, but the increase is accelerating. So this is a sign that inflation here in the US is not done, not by a long shot, as eventually employers are going to be passing on these increased labor costs to consumers. And this basically illustrates the fact that this whole disinflation narrative that we've been hearing about from Jerome Powell is a bunch of nonsense. And Powell more or less acknowledged that today when, during the Fed's semi-annual monetary policy report to Congress, Powell told Congress rates will be higher than previously anticipated. So he is coming to the realization that the Fed is going to have to get more aggressive in their fight against inflation in order to bring it under control. This is the kind of rhetoric we can expect as inflation continues to tick up. And I mentioned this in yesterday's video where I pointed out that any hawkish commentary coming from Powell in this congressional testimony could drive the price of the precious metals lower. And that is exactly what we are seeing today. Markets pretty much across the board selling off on this comment, but silver specifically down 3.4%, one of the hardest hit markets. Now, this is just more of this kind of bizarro market effect where we've been seeing higher inflation data leading investors to believe that the Fed will be more hawkish, a lot of this based on what we're hearing out of the central bankers' mouths, and that is causing the price of the precious metals to fall. Now, it is in my view, incredibly irrational for metals to be selling off on higher inflation data, unless, of course, you believe the Federal Reserve's narrative that they are going to eventually being able to drive inflation down to their 2% target with this series of rate hikes. Now, investors, I think, obviously do believe this Fed's narrative. Now, why? I mean, that's kind of beyond me. They seem to chronically get things wrong in terms of their inflation forecasts and their commentary on inflation, but nonetheless, clearly this is the case because we're seeing markets sell off as inflation continues to rise and as Jerome Powell continues to, wane more hawkish. Now, part of this is because markets have simply been conditioned to expect easy money from the Federal Reserve. That is what has inflated all of the asset bubbles that we have witnessed over the past decade plus. And now the punch bowl is being taken away. Markets across the board, selling off. But they say that markets can remain irrational longer than you can remain liquid. That's the old adage. And I think that today's price action is just a great example of why when you buy precious metals, you don't want to be using leverage, you don't want to be using credit, you don't want to be getting into levered up paper positions in the metals. I would stay away from ETFs. That's why you want to be getting your hands on physical metal. And I think that today's price action is a great illustration of the old saying, you got to buy when there is blood in the street. Now, there's a couple of reasons that I say that, why I think that this decline in the price of silver is really just a buying opportunity, and in gold too, maybe to a lesser extent. The sell-off in gold is not as steep, for example, but I'm going to go through some reasons here why I think that this decline in silver is really a huge opportunity for us stackers. Now, the first one is that high rates, rising interest rates, are not necessarily a bad sign for the metals. I think that this is kind of a conception of markets that a lot of investors have and a lot of stackers have. If rates go up, the price of metals is going to come down, but that's not necessarily true. I mean, look at 1980, okay? We don't have to talk necessarily about silver. People are just going to say, oh, it was the Hunt brothers that drove silver to $50 in 1980. Well, there's a lot of things at play there, but just look at gold. I mean, gold wasn't being manipulated by the Hunt brothers, and it hit $850 in 1980, an all-time high, and that was after Paul Volcker, the then chairman of the Federal Reserve, had hiked rates, the federal funds rate, to almost 20%. So in that instance, high rates were not a negative thing for metals. High rates are something that you're going to see when inflation begins to rise. It's not necessarily a bad thing for hard assets. There's no guarantee that rising rates will ultimately drive the price of metals lower. Now, the second reason is that although, Powell's talking a pretty good game here, a hawkish game, he's saying he's going to raise rates, they're going to go higher than previously anticipated, there's no way he's going to pull a Paul Volcker and get rates up to 19, 20%. And that is probably what would be needed to rein this inflation in. In fact, they might even need to go higher than that because this inflation is so extreme. So much fiat currency has been created over the past 2 decades. I mean, the Fed has gone to the markets, bought up $8 trillion worth of assets, and sure, they're shrinking their balance sheet now, but not fast enough. And if they were to do it fast enough, tank markets and eviscerate the entire economy. And nobody wants to be at the helm of the Federal Reserve or in Congress or in the White House when that happens. So I don't think it is very likely that the Fed, despite what they may be saying, is going to get too aggressive with interest rates. I mean, maybe they'll get a little more aggressive than people expected, but there's no way they're going to actually be able to get inflation under control, barring some radical shifts in Fed policy. And then the third thing is there's another development that we saw today in the news. That is President Xi Jinping delivered a speech in which he openly criticized the U.S. This is kind of a divergence from what you normally hear from him, saying that the U.S. is trying to encircle China and harshly criticizing U.S. foreign policy towards China. Following this speech, the Chinese foreign minister Qin Gang, he warned that conflict and confrontation is now inevitable between China and the U.S. unless the U.S. changes their policies. So all signs here are pointing towards an inevitable World War III conflict. And regardless of what form that takes, I mean, hopefully it doesn't become a kinetic war. We've already seen it in the economic front, and that is continuing to accelerate. The economic fifth generational warfare here for World War III. But I mean, it's sounding more and more like we may become engaged in open conflict over Taiwan with China. And the important thing to take away here from an economic perspective is that war is perhaps the most massively inflationary undertaking that a nation can get involved in. I mean, just look at history. We've got Britain losing the British pound's status as the world reserve currency following World War II. You've got the Weimar Republic in Germany following World War I. They experienced a hyperinflation. In Hungary, there was a hyperinflation following World War II. These are just a few examples, but war is incredibly costly. It's an incredibly destructive enterprise in terms of resources, and it's typically financed via borrowing, tremendous amounts of borrowing and money creation. And so, if we do get involved in this conflict, then inflation that we experience is going to make today's inflation look like a walk in the park. And this is why, I believe that buy when blood in the street is an adage that we should all be paying attention to when we have days like this, when silver is tanking, just because of a couple of words that come out of the mouth of a central banker. Stackers on moves like this, assuming you are a net buyer of metal, you're accumulating metal, we should be thrilled by news like what we're seeing today. I am. I mean, the opportunity to get silver at a discounted price, I'm not going to complain about that. If you need to sell your silver stack today for whatever reason, then yes, that is a negative thing. But if you are convinced that the US dollar's status as the world reserve currency is threatened, if you are convinced that the federal government is going to continue their policy of deficit spending, if you believe that the Fed is going to accommodate that, and ultimately when something in the economy breaks, this massively over-leveraged economy, when something breaks as a result of these rate hikes, the Fed will be reversing policy. And I still believe that. I mean, I don't know how far off that is, but I do think that that is eventually what we are going to witness. Then pullbacks in the price of precious metals, I mean, to me, they're just a gift, and we should take advantage of that. Now, it's not financial advice. I'm just kind of giving you my thoughts on what I'm probably going to be doing. But the point is that, when the prices of precious metals fall on such, a ridiculous event as, Fed Powell saying some words that investors don't like, then, I think it's a great opportunity. Now, finally, in today's video, I want to address some comments that I've been getting on the videos lately regarding the price manipulation of silver. Now, I mean, we know that some price manipulation does exist in paper markets. I don't attribute declines like today to manipulation, although some of you watching probably do, because it seems like every time the price of silver falls, I get comments about how it's just manipulation, it's just manipulation. I mean, I attribute today's fall to just investor sentiment, and one of the reasons that you can kind of tell that that's the case is that assets across the board are selling off. It's not just silver. And, I do think that investor sentiment likely is one of the primary drivers of the silver price, but we know manipulation exists. That's why JP Morgan has paid over $1 billion in fines for spoofing the precious metals market. It's also the reason that some JP Morgan precious metals traders were convicted of spoofing the metals market recently. So, it does exist. Now, I'm not convinced, though, that there's some kind of cabal or some kind of overt manipulation of silver to the downside. I suppose it's possible. There's just no hard evidence of it. Of course, the fact that over 1 billion ounces of paper silver, something close to that, gets traded every day, and you compare that to the fact that only about 800 million ounces are produced in an entire year from mining operations. I mean, it gives you some idea that, sure, there is some room for manipulation out there in the paper markets. Now, to what extent? I mean, there's no way we can know for sure. If you've got a link to some data that shows this conclusively, I'd be interested to see it. But it's all really just speculation. But let's just say that paper manipulation of silver to the downside is, in fact, what is going on here. Well, to me, many of the comments that I get on this channel are to the extent that, this manipulation exists. It's a reason not to stack precious metals, physical metals. I couldn't disagree with that more, because to me, this is simply an indication that we should be getting our hands on physical more, and that this stuff is probably even more undervalued than it would be absent the manipulation. I mean, I think that kind of just makes sense logically. And the thing about manipulation is, if you are an adherent to this idea that paper manipulation keeps the price of silver down, you have to realize that In the long run, no paper manipulation can override market fundamentals of supply and demand ultimately. And to the extent that the price of silver is being held down through some kind of paper manipulation, ultimately supply and demand will win out. And what will that look like? Well, ultimately, if prices are held down, that is going to mean there will be less production. There won't be an incentive to go out and develop new sources of silver, new mines, because the profit motive won't be there. And for a metal that gets consumed like silver does in many industrial processes, eventually that'll lead to a shortage. Eventually, if the prices are being held down by paper markets, some end user of silver, somebody who actually needs physical metal, not a futures contract, is going to go try and buy some. That could be Apple, that could be Samsung, that could be Tesla, any of these gigantic manufacturing operations that require quite a bit of silver. I think it's estimated that in an electric vehicle, in a Tesla, for example, there's something like a kilogram of silver because, silver solder is what is used in these electrical devices because it is the best conductor of electricity out of all the metals. There's really no substitute. Some operator like this is going to go out onto the market and they're going to try to obtain physical metal and they're not going to be able to. And, when that day comes, well, that's the end of the paper markets, folks. The paper markets are not going to be able to withstand that kind of an event because the thing is, you cannot build an electric car or an iPhone or a smartphone of any type or any of these electronic devices with a paper futures contract. You need the real physical metal, the kind that you can hold in your hand. So, and when that day comes, you think about all that fiat currency in those paper contracts, when it starts to look for somewhere to go, and there's not that much of this stuff to go around, well, you tell me what happens to the price of real physical metal when that day comes. So leave me a comment down below to let me know what you think would happen to the price of silver in such an event and all these other inflationary developments. I'd always love to hear what you have to say. Thank you so much for watching today, everybody. Really appreciate it. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.